Good morning, it's Trisha with Easy Emini Trade, and this morning I just want to go over a couple of the Slinky setups and 1 minute setups from yesterday, Monday, and I'll be doing a webinar on these two setups on Wednesday the 28th at 4 p.m. If you want more info, just go to my site, easyemintrade.com, and all the info is there. Just click on the tab at the top of the page. So the Slinky is being traded a little bit different than we used to trade it a few years ago. So I'm going to go over exactly what settings and so forth to use and how you can trade it in the current volatility. And then the 1 minute setup is really great for getting in if you typically trade off a range chart and you're having trouble getting into your trade. So it's slightly different than the Slinky setup, and I'll go over the settings on both of those during the webinar, and I'll just kind of go over how I'm trading it and how it's working out, and then you guys can check it out and see if it's something that you want to implement. So what you're looking at right now, this is NQ for yesterday, Monday the 26th, and you're looking right here. This is the super trend stop, and like I said, I'll go over all the settings and everything during the webinar and how to set up your charts. And so I'm using a double stochastic. These are two stochastics overlaid in the same panel. And then I've got Gordon's indicator on here so I can cheat, but it's not a necessity. And this is Ninja 8. And so this is right off the open, so I wouldn't be too interested in that. But I'm still using the double stochastic for entry confirmation as described in the very first Slinky webinar I ever did years ago. The only difference is that I'm not using a filter chart for taking the entries because I'm trading off a pretty large chart. I've got a 12 range here. When the market's fast, just up the size range chart if you prefer to use a range chart. You can still use a tick chart, just something bigger if the market is volatile. And what you're going to have to do is just be very aware of areas of support and resistance and decide if you've got enough room to take the trade. And I'll go over what I'm doing for stops and everything tomorrow as well. So we get this set up here around 9:37. It's valid. You could take it down to the support area around between 38 and 35. And the buy here, technically it is valid and it's into resistance. So you would have to decide if there's enough room to take that, take that trade. And obviously that's always going to be a judgment call on each individual person's risk tolerance, right? And then this one here, not valid because we're in overbought here with my red line. This one here, valid. Now here's the thing I want to point out is that 40-point gap that you get between the two stochastics is very telling. If you're getting a setup and you have a 40-point gap between those two stochastic lines, that is a heads up that price is either going to go sideways or pull back from the direction that you're taking the trade, at least initially. Doesn't mean that it still won't go, but that is generally something that you see happen over and over and over again. So valid short right here into support. There's enough room to take it. You take it. Realistically, you probably didn't sit through the pullback there because we were very sideways at that point. So here's an example of a 40-point gap. There's no setup here, but let's say that you were short and you were, having to wait it out, but you didn't take your profit here, and then you see it bounce here and you see this 40-point gapper. That's a heads up that this is probably going to move lower or go sideways to fill this distance between here. So let's say that you were short thinking, I'm going to hold on and see if I can get a little more out of it. This would basically agree with that possibility of it going lower. So over and over again, you'll see that here's a buy, technically valid, but we've got our 40-point gapper, so it's a pass. And you can see if you use the opposite super trend stop, you would never been stopped out, but you would have had to sit through that pullback after that 40-point gap there. So if you do nothing else other than watch that, you will find that that will be so beneficial to your trading. And this short here, not valid. Buy here, 40-point gap. Short here, valid. So there's lots of opportunities. And if you find, and I'm looking to get in, let's say I'm looking for a short, I want to get in under the low of the bar that's closing below the super trend stop. If you're trading off a range chart, I'm just going to show you this. You're going to need a range bar predictor if you're going to use a buy stop or sell stop to enter. So let's pretend, there's no setup here, but let's pretend I wanted to get in short under the estimated low of this bar here. I would just put a sell stop in a tick below that estimated low, and this will adjust until the full range of the bar has been established, but really a necessity if you are going to trade using a range chart. And so there were many opportunities yesterday. It was very fast and difficult to get in. So if that's the case, then you can up it from a 12 to a 16 or a 16 from a 20. So up to you how large you want to go. Obviously, the larger the chart, the larger the stop. And here's the 1 minute chart on NQ from yesterday. And you can use these setups on any instrument. If it's an instrument that doesn't have a large range or a lot of volatility, you just decrease the size of the range chart that you're taking your entries from. So right here off the open, not interested. And technically the buy here right off the open wouldn't have been valid anyway because of the oversold area here. Buy here valid into the resistance area, so that would be like your target area. Short here valid, and realistically you would look to the left, see the last area it reacted, and use that as your first possible area where price could get stuck. Now technically this is not valid based on my stochastic. I want my green under my red for a short, or as this is closing below the super trend stop, or I want my red line in oversold, which for me is under 20. But this could be an aggressive entry. If you got a 40-point gap and you know the price is going to likely move, in this case it would likely move lower or sideways, you could be aggressive and take that, anticipating that. So it just depends on how aggressive you want to be with that. Buy here, valid, but into resistance. Also, we got our 40-point gap there, so we'd pass. This short here, we know we've got support over here, so you just have to determine if there's enough room to attempt it or not. This one here, not quite one we'd want to take with our 40-point gapper. Not valid here. Unless you want to be aggressive, you could take the buy here with the 40-point gapper here in the opposite direction. So basically, you're always looking for support and resistance areas. You will have fewer setups on a time-based chart, but just like with the range chart, you're going to want to be aware of support. This short here, valid into support. And if you're sideways in the area below to where you're expecting a reaction, you want to take a short, is not that far away, then you pass. Same for the buy. If the area above you is not that far away and you decide that there's not enough space to take the trade, then you pass. You have to be willing to differentiate which trades to take and which to pass on. Unfortunately, that's what we got to do. We got to think about it, right? And there's always plenty of opportunities, so you do not have to take every single trade. So just based on the amount of room that you have to be profitable, if it should get stuck at support or resistance, can be very beneficial in your trading regardless of what setups you ever trade. So I hope that you find that helpful, and I hope to see many of you tomorrow at my webinar, and I hope you have a fabulous day. Take care, you guys.